elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. All right, this is the underground. We specialize and talk more about high growth companies that are in the mid and small cap range. This is a Patreon promotional, so this will go on the Patreon first and find its way on YouTube later. We're going to be talking about this one stock called the Real Brokerage Incorporated. All right, ticker is REAX. Trades on the NASDAQ for $3.87 a share. Market cap is $816.23 million. All right. Quick disclosure, I do not own the stock. I'll pull up my portfolio right here. So you see all my positions right there. This one is not one of them. So, you're getting a third party, stock analysis, opinion on everything and so forth. All right. Fair warning, I'm coming down off the flu. Okay. So, there may be some coughs and sniffles here and there. So just work with me. All right. Where is this company headquartered? What do they do? All right. Well, they're a real estate technology company. All right. They offer brokerage, title, mortgage broker, and wallet services. The company was founded in 2014 and based out of Miami, Florida. All right. Looks like they got 432 or 39 employees right there. And pretty much consistent within their business model, they have a full tech stack product offering that serves as the actual foundation office suite for realtors. All right. It's a one-stop shop. All right. A lot of realtors, what they'll do is they'll be working with several different softwares, MLSs, and so forth. No. They do it all right here on this one platform called Real. All right. And the product offering of Real is very sticky. All right. I like the way that they have structured how their business runs. All right. So one thing that I noticed that is unique about this company within their business model, there's no marketing. All the marketing done is word of mouth. All right. Grassroots, word of mouth. And they pretty much incentivize these realtors that are in this actual platform to become recruiters to recruit other realtors. And these realtors will get rewards for that. They'll get a little piece of the new realtor's first closing costs, and then they'll go climb some sort of reward tier within the business and so forth. Also, they offer this is an emerging growth company that offers a stock purchase plan to these actual realtors. So they believe in revenue sharing and so forth. So I think that's genius. All right. So, in this stock purchase program, pretty much how typically a lot of these run are, a portion of your paycheck, you can invest it and the company will match 15%. So if you buy $100 worth of stock, we'll buy $15 worth of stock and for you, and then you'll get the $115 worth of stock. All right. So with this actual program, realtors don't get traditional paychecks, right? So they rely on closing costs. So essentially, a realtor can, dedicate a portion of his opt to dedicate a portion of their closing on their closing paycheck, and they can participate in the stock purchase program. So with that, the actual stock-based comp portion awarded, a lot of that is a stock purchase program in there. It's pretty clever. All right. I really like it. It provides a lot of support to the actual stock itself when the employees are actually participating. And you want that too. You want shareholder alignment. Now, do a lot of these realtors think like that? Like, do they think like a lot of these other shareholders, like you and I, or these investors like you and I, in terms of we own a piece of the business and this and that? I assess probably not. A lot of the employees don't. So typically, what happens is they'll participate in this program, and then they can, of course, 1 year the units can vest if if they so happen to get an additional bonus of RSUs. But all in all, a lot of employees, they can just sell their stock. All right. After they do the stock purchase program, it just vests. So now the actual there a lot of these stock purchase programs will have vesting periods. So you may have to wait a year or whatever. Some companies do 6 months, some do 9 months. This one looks like they got, there's a year vest on a portion of the stock purchase plan contribution added to. All right. So there's that to consider. Double-edged sword though. All right. So if you have a company that has a stock purchase program, the stock will get a lot of support going through and there will be less volatility. All right. Now, with that being said, that can also be a double-edged sword because if times go bad, these realtors, remember, they don't get steady paychecks. It's all commission. So let's say the housing market is under depression and these realtors are not getting paid and they have stock, they will sell their stock, guys. All right. So, and that will put downward pressure on this type of company and this business model big time. It'll probably, you can see, 3 times more volatility on the downside just because of these things. All right. So that's something to consider. Let's talk about some filing, or actually before we do, let's do a sniff check on their balance sheet valuation portion. 55.78 million in cash, net cash, no debt. Love to see it. All right. Um, Profitability profile. This is formatted like it's a REIT on Seeking Alpha. However, their gross profit margin on their mortgage portions are 44.60%. On their titling, their margins are around 80%. So there's that to consider. On their actual business model, they offer, let me see here. Let me find this slide deck. All right, find it on here. Here it is. That's what we were talking about. So 45 to 50 gross margin on mortgages, and then 80% gross margin on titling. So your titling is more of your one shot, okay, we got your title stuff done, and it's a high margin inclusive thing. But all in all, their saturation of TAM is still working. I'm trying to find this other slide. There it is. So here's all the states that they're currently in. The blue ones, the ones that are dark blue, are mortgage only, and the teal ones are title only. All right, and then your checkered beige states right here offer both services. The majority of the realtors that are in-house network are coming from California and Texas. It's very polarized, actually. California being the number one and Texas being number two. So I like that. All right. They're agnostic to different environments and state regulations. California has some pretty tight knit regulation and regulatory red tape going on around there. Um, but they've been able to persevere, and most of their customers in California. So that says something to me. All right. Texas, a little more lenient on the real estate side. The owners of real estate on there by law are pretty much, they got the power. The landlords got all the power around there. So there's less regulatory tape over there. All right. So here's another slide that caught my eye. Penetration of TAM. Okay. So here's the actual here's the comparison of existing home sales as averse to how much real estate agents are joining the real estate agent growth that they're experiencing on the platform. So Q4 of 2021, they had 6,203 existing home sales, and then it just falls off a cliff, and then it levels out over here. And as you could see, the polar opposite, real estate agents coming to the actual platform, um, and crazy growth rates. All right, 3,850 to 30,000 realtors are up on there. All right, so I mean, they're doing it. They're taking market share. There's no doubt about it. All right. Um, let's talk about some of the stuff that they're doing on here. So the realtor will join this real this real company platform. They'll do it all. They'll have a little co-pilot to help the agents, and there's some AI features on there as well. And you got 24/7 assistance. Um, a digital wallet within the actual tech stack. They use that for holding escrow and closing charge, closing costs and so forth and closing. So, I mean, I like that the platform is very sticky and it's all in a one stop shop. All right, and there's the churn rate and the actual rate at how much agents are joining is pretty apparent on how superior the tech stack is. So a lot of the value is going to be in the tech stack of this company. All right. All right. Let's talk about some other stuff. Earnings. All right. I like the way that they present on the actual earnings call. It seems like they got a good actual team. Now, one thing that is kind of a pet peeve of mine is I don't need 50 slides to get the point. All right. So I think they overkilled it on it. It's kind of a turn off. I kind of having a hard time navigating through here, but all in all, I mean, I think that they're doing a good job with investor relations. They got a buyback running. So let me see here. Excuse me. And remember, I'll read this out. Total stock-based compensation was 19.9 mil, with 12.6 related to the agent stock purchase program recorded in cost sales. All right. So a portion of stock-based comp, a big portion of it, is related to the stock purchase program. All right. And remember, these employees, they're paying into the actual stock purchase program. So they're just not getting RSU units for nothing. All right. So let's get that out of the way. I like that. All right. So, and then they repurchased 3.2 million shares for 15.5 million. So that's pretty good. We'll go to the actual financial statement. We'll look on a quarterly basis, see what's happened there on their actual shares outstanding. So from last quarter to the past, or the quarter before the last recorded one. All right. Little gap here between the basic weighted average shares and diluted weighted average shares. Shares did increase. However, they closed the gap on the diluted weighted average shares and the basic weighted average shares with that buyback. So that's something I like to see. So now the shares are organic. There's no dilutive projections or dilutive. There's no dilutive delta between these basic weighted average shares and weighted average shares outstanding. All right. So there's that to consider. All right. Sales and margins and so forth. All right. So their price to sales is polarized on the downside because there's low margin. All right. They're doing 1.8 billion in revenue, and the company is worth 816 million on a market cap basis. So the format of this is they do have free cash flows though. All right. So if you look at their free cash flows, they're positive and growing. All right. So that's the actual saving grace. I think that looking at this investment, after the actual growth has been had and saturation of Canada and the United States happens, and there's plenty of growth to be had there. Looking back on those states of what they participate in, they're in about 15 states, by the way. The end game on this investment, after the multi bags of the growth of their actual TAM saturation, I believe this company will be a dividend paying company. All right. So there's that to consider. Let's talk about, let's close it out by doing a little bit of a 10K analysis, which actually is a 6K. All right. So little funky situation. They're headquartered in Miami, but they're filing as a foreign entity on a 40F because they're trying to make they're trying to meet Cedar plus requirements and so forth. So, what's the difference between a 20F and a 40F filing? All right. So, your 20F filings are more tailored towards more tailored towards foreign entities that are non-Canadian. Okay. And your 40F filings are more tailored towards your Canadian entity foreign filings. And 40Fs are more tailored towards Cedar Plus regulatory bodies. So that's why that is the way it is. Now, the way that they're filing, I don't have an issue with them filing the way going the 40F filing path, but I do have an issue with their auditing. All right. I've been looking through, they I've yet to see some formal auditing done on here. They're filing as a 40F emerging growth entity and a foreign entity. And, so they're able to trade on the NASDAQ. So essentially, you can't take it, these numbers are not actually formally audited by an accounting company. All right. Why do companies do this, you ask? Well, it costs money to do this. All right. It's not cheap to hire accounting firms to do actual audits tailored towards SEC requirements, and it costs money to get that stamp put on your PCAOB independent registration stamp, put on your 10K, 20F, 40F, whatever. Okay, it costs money. So a lot of companies try to bypass that, and it could hurt the stock as far as trying to command premium due to the lack of the credit there. All right, so it becomes more risky when the numbers aren't actually audited. All right. Me personally, it's a deal breaker. I can't invest in this company if they don't have proper auditing. I don't care how good the numbers look. If I can't take it to the bank that these numbers are real, I mean, I'm staying away. That's just me. How can they overcome this? Well, I think that they will, because once they saturate more TAM and so forth, and they become a bigger and bigger company, they're going to be able to afford to do proper auditing, and then they'll just outgrow these issues. All right. Is there some delta between um, the premium of if it was an audited company versus an unaudited company, and is there a play for alpha there? Sure. And there are a lot of investors that specialize just in that. Me personally, I don't like to delve into those type of scenarios. That's not really my style. Um, but if the company were to do proper auditing and get PCAOB regulated, stock can command higher premium. All right. What do I think about the stock? What do I think about the investment? Me personally, it's not for me. All right. I think they have a good management team, and they're focused on growth, and they're doing the right things. Um, the actual stock price action prediction, um, I think they deserve to be up, but I think there's a limitation of market cap that they're going to be able to reach um, while they're staying unaudited like this. All right. So that's something to consider. Um, what do I think about stock price action going forward? I see them bleeding back out, bleeding down a little more, not too much, but I think they're going to give away some. They're going to give away some of the gains. I could see this going to maybe not like 350, 340 ish, and hovering around these actual valuations right here. So I hope you guys got value out of this. If you want to up your game as an investor, check out my Patreon, be with a group of like-minded investors. I'm always on there posting stuff. There's plenty of members on there. $10 a month, really can't beat it. I got 5 seats left. I anticipate those will just fill up pretty quick here. So check that out. I appreciate all your support. Comment down below if you have any questions. Yeah, like and subscribe to the video. Comment down below. Say I'm subscribed. I will respond back. Y'all support means the world to me. All right. With that being said, I love y'all and take it easy.